Um, so yeah, NameSilo Technologies URL on the CSE, currently trading at a price of about $1.50. I think it actually was a little bit higher in the trading session today, maybe $1.55 or $1.58. But market cap of 132 million. It does not pay a dividend, and they are a low cost provider of domain name registration and management services with over 5.8 million domains under management and customers from approximately 160 countries. They are one of the largest domain name registrars in the world. It has grown its domain names under management from approximately 745,000 domains at the beginning of 2017 to over 5.8 million today. And they indicate that they maintain a customer retention rate of approximately 55%. Now, we've monitored NameSilo for some time, but despite its good top line revenue growth, we really struggled to like the business given its inability to generate meaningful earnings per share, or yeah, EPS or earnings per share, which in my opinion is why the stock had essentially sideways traded for several years. But more recently, you can see here the stock has performed very strong over the past 12 months, up over 380%. So let's take a deeper look at the business here and see what is driving the tremendous run. Now, just to go over some operational updates first, on September 12th, the company entered into a definitive share purchase agreement to acquire Sewer VUE technology for 2.45 million Canadian. This is a company which specializes in large diameter pipeline inspection technology, and this will now allow NameSilo to provide inspection services to clients in the municipal, mining, and engineering sectors. Now, the company does make investments in other companies, which I'll show you in the future slides here. But I find it a little peculiar that a domain registry company is getting, into the pipe penetrating radar business. So, with this said, they are almost more of an investment company to some degree than just a domain registrar. So keep that in mind. And the next acquisition, or the recent acquisition here, which they made, was for shorturl.at, which is a free tool to shorten URLs and generate short links. I could not find any disclosure on what they paid for the business. Maybe there is something out there. Commented in the in the comment section under the YouTube if you can find that. So now that I've already mentioned that the company has several investments, you can see they own own positions in several companies, including names which we have covered on the podcast before, like Atlas Engineered Products, or AEP, on the TSX Venture. They also have investments in associates of over 1 million on their balance sheet, including Ola Media, which is a digital media company focusing on touchscreen displays in ride-share vehicles, as well as Alchemy Labs, which is a leading nanotechnology-powered industrial coatings company focused on the automotive and defense sectors. But from the equity losses on the right-hand side here, you can see that the businesses are not profitable, which is reducing their investment line items. And as well, you can see that the company from this slide, that the company has exposure in digital currency, including Bitcoin, Ethereum, TRX, POL, and some USD stable coins. So while we're on the note of the balance sheet, you can see here that they have, again, just kind of going over what we went over on the last slide here. They have 1.1 million in investments, as well as investments in associates for over 1 million, which again are the two names which I described earlier, and 1.3 million investments in digital currency. But one thing that I did not cover on the last slide is that they also have an investment in a joint venture with SAW Technologies, which again you can see as a line item on the balance sheet here. I'll also note that they do have some note receivables from these companies, which it invests in as well. So it is earning interest from these companies. Now, the cash position on the balance sheet as at June 30th, 2025 was solid, with a net cash position of 3.6 million, or 4 cents per share. And the company has slowed its aggressive pace of increasing or issuing shares. You can see that big jump up at the beginning or end, I guess, of 2020. Now, moving over to more of the financials, Q2 2025 ended June 30th, 2025. Revenue was up 22% due to an increase in domains under management, marketplace revenues, and sale of ancillary services. The company has also been able to produce some better EPS over the last couple of quarters that you can see there. And bookings year to date, so this is adding up Q1 and Q2, were up 9% year over year, which is good. And looking a bit deeper on the quarter, gross margin was up to 26% of revenue from 22% in Q2 of 2024, which I believe I read somewhere that it's the ancillary revenue boosting margins. The business also produced adjusted EBITDA of 1.5 million, up over 100% year over year, and net income was 1.2 million or 1 cent per share compared to a gain of 225,000 or essentially break even on an EPS basis in Q2 of 2024. And you can see that under the other items, the business was generally negatively impacted with a loss on foreign exchange, a realized loss on some crypto. Overall investments in financial assets were down. I think like Atlas Engineered Products price did come down as well. That's probably driving that a bit. And we can also see that their loss from equity pickup was negative, which again is from their investments in associates. Looking at the valuations, trailing price to earnings ratio of 75 times, trailing price to cash flow of 16 times, and a trailing enterprise value to EBITDA multiple of about 32 times. So despite the company's good long-term revenue growth and getting more into meaningful earnings per share, I would argue that the company is currently pricey. And realistically, I'd like to, get an adjusted EPS figure here as well, and really get more of an idea on, kind of normalized EPS, taking out the swings in fair value of their financial assets, etc. So to conclude on NameSilo, NameSilo is part a domain registry business, but also an investment holding company, essentially. The balance sheet remains strong with net cash per share of 4 cents. The company continues to make acquisitions and deploy capital on investments. So the question that I would raise is, do they not have any good options to maybe reinvest in the domain registry business directly? And, I'll also note that they have been investing in unprofitable businesses as well, which, is decreasing their investments in the company. Financially, Q2 2025 marks the company's 11th consecutive quarter and 7th year of consecutive revenue growth, as well as the business has been increasing operating income and cash flow. So I really think that this is what's been driving the stock higher. But the business does trade at elevated valuation multiples, in my opinion. So I do not think that it would be a bad idea, if I was management, to raise some capital at this level, if they're looking to continue to deploy capital. But nonetheless, I would argue that the current valuations are a bit more on the pricey side. Now, I don't think that it's a bad business, but it does remain a monitor in my eyes. The stock has done tremendously well over the last year, and the financials are improving, but it is an entity with its fingers in many pies, which makes it more of a complex entity to analyze. And of course, here are those pies that I made for Friendsgiving uh, earlier this weekend, because everyone who just heard this financial analysis cares so much. And this is the disclosure. We do not have a position in the business.
Thanks for ending with the pies. Yeah.
Yes.
Good long-term revenue growth,
Mhm.
inflecting into profitability, which is nice to see. The valuations on a price to cash flow basis are a little rich unless that growth continues and the inflection continues significantly. That's just our quick review. And I hope that answered the question.